All right. Well, good afternoon.
Mike.
Hey, Joe. How are you
doing?
today?
Wonderful.
Good. Love the hat.
Thank you. We got the rally cap on. It's time,
It's time.
right? I think you
Yeah.
predicted 3 losses for the Bills, so we gotta start rallying.
We
'cause
do.
We're there.
We do. Do you got a spare one of those? Maybe I can get one.
I don't. I really need a backup
Oh,
though,
okay.
because so if you're thinking of Christmas gifts, a
Okay.
backup
That's-
Bills hat for me.
that's
I usually only wear this to the games, but
Okay.
times are desperate after a loss like that.
Exactly. So, well, welcome to everyone that's online to this is now our 4th episode of the Market Update with Mike and Joe. So thanks for all of you that have joined us. So today, first of all, obviously we typically talk about the Bills. And Joe, I'm having a hard time looking at you right now with that hat on. But that being said, just real quick, obviously the past 2 games has been painful.
Yeah, 2 weeks sloppiness.
Particularly
pulling
those.
at our heartstrings like the bond market has been this year.
Yes.
Right. So
yes. You know what? It's just hard when you really beat yourself.
Yeah.
But I got to tell you though, the one thing that I was super impressed with is I did listen to the post game interview with Von Miller, and I thought he was awesome in regards to looking at the positive side of things. And I think for whether it's a sports team, whether you're a realtor, whether you're a lender, adversity from that builds character, right?
Absolutely.
Or it shows your character. So we're in those types of times now.
yeah.
And just to try to to segue into usually what we talk about on these podcasts is Joe and I give the listeners and just an update on the market, what's going on with mortgage rates, what's going on with real estate sales, and it seems like it's changing and evolving each month. So I thought that would be a good place for us to start.
Absolutely. I'm going to take the rally hat
You're
off.
gonna take
It's
the
getting
hat
a
off,
little warm.
Joe? Okay.
Put it here in the middle.
Maybe when we end it, you can throw it back on for good luck.
All right.
Okay. So, speaking about the market, so last Thursday was a really big day, and the reason why I say that, that was the day when, the news was being released around what was going on with inflation. Joe, you and I were at a realtor event, and that morning, the government released the latest CPI inflation data, and we said if that came in where it appears that inflation is cooling off, which the report showed, we would see probably a pretty good decline in rates.
Yep.
And that's exactly what happened. That's what took place. Rates have really dropped in the past week and a half from, call it 7% to the low to mid 6s for 30-year fixed rate loans. That's a pretty big move, in rates. And as a result of that, we saw folks lock in their rates and take advantage of probably the lowest rates we've had in the past 30 days or so.
Yeah, I think they said it was the highest move in the bond market in the last decade, right?
Right.
The biggest jump. And we've been seeing the opposite, right? This year we've seen a lot more of knee-jerk reactions in the other direction. It was nice to get a reaction in the good guys' favor this time.
Right.
And
Right.
I think rates overall went from 7.22 on average to 6.75. So that was huge.
It's a big drop.
And we've seen them, trickle down a little bit this week as well.
Right. Yeah. So for the realtors that are on this call, this is, again, a great time, a great reason for you to pick up the phone, just stay connected with your prospects, advise them of what's going on with rates, what the impact that has on their monthly payment, to get them, re-engaged. And we'll talk more about that in a minute. But Joe, let's talk, each month we do this, we talk about the market, what we're seeing in regards to inventory of homes for sale, specifically, what homes have been listed for, what they've sold for, what they've appraised for, what took place this past month compared to months prior.
Yeah, so in October, interestingly, we've kind of followed a trend of being at the highest level in March of houses going for the most over asking, to now in October, we saw a little bit of a dip almost across the board. In Monroe County, on average, we saw houses going about 5.5% over list. That was down from 8.5% in September. So, a little bit of a downward trend there. And then in Monroe and the surrounding counties, 3.7% over list. So almost flat. In Onondaga County, conversely, they went up 3.9% over list, which was up from the previous month. And then in Onondaga and surrounding is 1.01%, so about 3% lower than the previous month. But when we drill down on the specific zip codes, there's still definitely some hot pockets. The 1460609, 14616, and 14620 actually in the month of October were the all above 20% over list. And that makes sense because it is that price point of those first time home buyers that have been so desperate to get the home. So those hot pockets still do exist throughout the market.
Yeah. It's interesting. We've talked about, now this is our 4th podcast, and we've talked about how this year each zip code, each community, stands on its own. So again, for the realtors that are listening and now, feel free to reach out to us. We'll share this data with you if it helps educate your buyers on what's going on month by month. Obviously knowledge is power, and we want to certainly share that with
Absolutely.
you. Yeah. So let's kind of shift gears a bit. So we are obviously next week is Thanksgiving week. Obviously the holidays are here. I'm finding on my drive into work, half the stations are playing Christmas songs right now.
It's the most wonderful time of the year.
It is the most wonderful time of year. But Joe, as you think about, going into this time of year, what are some of the tips or suggestions that you would provide to buyers that are out there, buyers that maybe might be fresh coming in, just starting to look at homes, or those that have been looking all year long and just haven't had an offer accepted?
I think one area everybody's, with Christmas shopping, Black Friday shopping, there's always deals out there to buy, and it's just being mindful of the spending. A lot of times opening new credit cards to get that discount, that can hurt you a lot more than it can help you, especially if you're in process for a loan. A lot of lenders are going to be looking at, we have technology that alerts us when new credit is opened after we pulled credit, and then it leads to us having to investigate that further with the borrower. It could potentially swing your deal one way or another. If you're thinking of buying that Mercedes with the big bow on it to put in the driveway for Christmas, maybe wait till after the house is purchased to do that. So, just being mindful of the credit and the spending. If you're planning on buying a house, or if you are in process, especially, not opening those new credit cards or those new debts throughout the holidays is as enticing as the deal may be. The other side of it, the repercussions from that could be harmful.
Yeah.
And then, I think, as a bank, we see at this time of year a lot of fraud when it comes to people's checking accounts, credit cards, right? So make sure you're monitoring that spending. This is a time where, unfortunately, predators prey, and they'll take advantage of that person maybe not checking their statement, just chalking up to, oh yeah, I spent, I bought a bunch of gifts, I overspent for the holidays, and now my credit card statement is in the mail, and then you look at it and you don't recognize any of those purchases. So just being mindful of that. I know with some of my accounts, I can sign up for alerts if there's large purchases. Just monitoring your the activity that's going on your cards.
Okay.
It's important.
Yeah. Super smart. So, hey, just real quick, it's always good to, I think, to share a little bit of good news. And this past, we heard some really good news about our friends down in Syracuse. And again, this has been on the news. Some really cool things are going on there. If those that are listening to us right now, if you haven't heard, Micron, which is one of the biggest companies in the world, has decided to add 9,000 jobs to Central New York with an average income of $109,000 per year. That is going to take place over kind of a long period of time, but that is going to provide, a real boost, certainly to Central New York and all of New York. So we're excited about that. Wanted to share that news. The other bit of news, again regarding Syracuse, is that it was deemed the number 3 most affordable market in America to buy a home in. So when you think about buying a home, there's been a lot of press out there. Rates have gone up, prices have gone up, but it's more important than ever that people take a hard look at the real facts today around, what's this house going to cost me in this market today? What is my payment going to be? And particularly if you're a first-time home buyer, what's that payment going to be compared to not only my current rent payment, but where's my rent going? And Joe, maybe you could comment on what are you seeing, with rents in this marketplace?
Yeah, I mean, I don't have exact numbers, but I have been hearing that a lot of landlords are planning on raising rent, and it's becoming a bigger and bigger issue as we see the affordability not only on purchases but on rentals really going down from a percentage perspective, how much affordable inventory there is out there, regardless if it's a purchase or even for rent. So that's a big piece of it. I know in the last podcast we shared that specific example about the customer that bought a house a few months apart, and just really again going back to that theory of educating the borrowers of not only what's going on, but how does it impact your payment and how does it impact your ability to afford, because as we see the 3D home printing is not ready yet, right? So we're not going to have any immediate answer for this inventory issue that we're seeing, and buying now versus buying in the future may make more sense because it's a little bit more affordable right now, maybe a little less competition on the market than there is typically in the spring.
Right. And I think too, with those people that are first-time home buyers, they're renting right now, not only, really taking a hard look at what is, the potential impact of that rent going up, but if they, again, for the realtors that are dialed in right now, going back to those first-time home buyers, talk to them not just about what their rent, where it may go, but on the last podcast, we talked about, the good news with student loan forgiveness. So going back to those folks, if they have student loans, did they take action on that? What impact has that had on reducing their overall debt? Rates have come down, and really just, again, re-engaging those buyers and making certain that they're looking at the numbers today, not 30 days ago, but really doing the math today.
Yeah, and I think you hit on an important topic with the student loans. A lot of borrowers are finally coming out of this forbearance that was granted by the government when COVID hit. And, with student loans, re-entering some type of income-driven repayment plan with the student loan holder will be important, because right now their payment's going to reset to what it was. But depending on their level of income, they can reach out and negotiate a lower payment based on their income, which not only helps them from being able to afford the payment, it also helps them from a qualifying perspective, because we can use those payments that are based on an income-driven repayment plan. So if someone has $100,000 in student loans and is only paying $50 a month towards it, we can actually use that $50 a month in qualifying, as opposed to having to use $1,000 a month payment. Right. So that's a huge
that's
advantage.
Massive. That's huge
for them to be able to qualify.
That's huge. So Joe, we've had some questions that have come to us online. So I'm just going to read some of these off. So the first question that came in, again, this came from a realtor. And the question is for sellers, people that are looking to sell their home, considering putting their home on the market in the spring, if not doing it now. Are there any specific repairs that they should consider doing during these winter months? Obviously, they're internal, right. But what are some of the things that they should think about doing to try to make their house as attractive as possible?
Yeah, I think number one, if somebody is thinking of selling, I would reach out to a real estate agent. Mm-hmm. If you don't have one, feel free to reach out to us. We'd be happy to refer you. They're going to be the experts in being able to help you decide what's going to get you the biggest bang for your buck in terms of repair. I mean, at this time of year, you probably see a lot of interior painting going on, right? Trying to freshen up the paint in the walls. But, talking to that listing agent earlier in the process is really going to help guide you in that direction and really understand what can I do, what should I do, where should I spend my money in getting that done. And that's so important. I know I'm talking to a lot of agents over the past week or so that are, preparing their listings for January and February. And, they're doing that in tandem with their client and kind of helping them guide through that, say, okay, let's be ready to list at this time of the year. So, really reaching out early. I'd be probably lying if I tried to say, go do this or go do that. But, what I can think of is, freshening up your paint on your walls.
Right. I think too, the other thing, we talk about the spring market, and for the past three years, the market's been hot in January, February, March. I mean, it didn't wait to that traditional springtime period for things to hit. So I think that for those folks that are, considering, buying a home, you might find that now, and even in the winter months where, frankly, there might not be as many active buyers in the market today, you might want to get out there right now and at least make certain that you're keeping your search fresh, active.
Yep.
So, Joe, another question that came in, so with, in this environment, with a lot of the uncertainty that's in the marketplace today, what can realtors, and the lenders that they work with, particularly GRB, what can they be doing to really re-engage their buyers? And we talked before about, we actually have someone here that works at GRB. I was chatting with her yesterday. She had to put in 13 offers to finally get the 14th one accepted. So obviously that's, staying the course, right? We're not seeing as much of that today, but what can we do to get these buyers re-engaged, to make certain that they're prepared for when these houses come on the market?
Yeah, and I think you touched on a little bit, right? Number one is just checking in, see where those buyers are in the process. Are they in the mindset of maybe, re-entering the market, or are they frustrated from having written 13 offers? Right. There's no better time in the holidays to reach out to somebody for no reason, right? Just pick up the phone, wish them a happy Thanksgiving, and see how things are going. And those little conversations can definitely lead to bigger ones. I think just re-educating the borrowers, we've talked about that a lot throughout these first 3 podcasts we did, and just kind of giving them guidance on where the market is and why buying now makes sense. And I think we talked about an article where, some investors from different banks are projecting rates to go to 10% before they come back down, and others are projecting we're going to see rates in the 5s. So using that as part of the tool, what happens if they do go to 10? You're not going to want to buy then when you could buy at 7 and refi out of that or into a lower rate, within a short amount of time. So, there's definitely different projections as to where rates are going to go, like predicting the 2 feet of snow we're going to get in Buffalo on Sunday.
Right.
But they're all over the place, and nobody knows, nobody has that crystal ball, but what they are today. And if they do come down, you could refinance. If they go up, you'd lose out on that lower rate.
I think the last thing too, just about, re-engaging these buyers is, we are always coming out with new programs to try to really address the needs of our clients. And, the past few years, we've talked about this a lot, a lot of first-time home buyers just have been, cut out of this market. They haven't been able to get their bids accepted, for whatever, reason. We will be rolling out soon, several programs that do provide, down payment assistance, closing cost assistance, and certainly, encourage you to talk to us here at GRE to learn more about how those programs can help your buyers get into homes today.
Absolutely.
And last thing, obviously, as I mentioned at the top of the call, Thanksgiving is next week. So let's get to kind of end on this note. Any Thanksgiving traditions that you'd want to share with our audience?
Yeah, so I come from a big Italian family. We're usually on Thanksgiving, we're usually about 45 to 50 people. And then after eating a giant meal comes the desserts. And I think that might be my favorite part of the holiday, because it's probably a table twice the size of this, just lined in pies and cookies and cannolis. And it's just a big eating gluttonous day. So, that's what I usually like to take part in. And of course, the Bills are playing on Thanksgiving this year.
Right.
So we're going to have to figure that out and schedule around that.
Nice. Yeah, I'll just share one real quick. So, we have a large family as well. And one of the things, this started actually when I was like 13 or 14 years old, where it was determined that all of the men needed to do the dishes. And this all started with my aunt gave me a pin that said no man was ever shot while they were doing the dishes. So from that point forward, we've always been, doing it. So, once the meal is concluded, you'll see all of the men scrambling to do the dishes so that we don't get shot.
Should invest in some paper plates.
I should invest in some paper plates. So guys, with that concludes episode 4 of the Mortgage Update with Mike and Joe. One of the things that we want to make certain that we do is that we encourage everybody to email their questions, to us. We want to make sure that we're talking about things that are most important to our listeners. And with that being said, we wish everybody a happy Thanksgiving, and we're wishing and hoping for a big Bills win.
And go Bills.
And go Bills. Thank you, guys. See you.